Thanks for tuning in, Dividend Dashboard here. I will be going through the companies that I bought and dividends received for the month of November. Also, I will be doing a full portfolio update. So if you would like to follow my dividend journey, consider hitting that subscribe button. It's free and it helps the channel grow. This month, I bought 4 companies: ADP, Kroger, Realty Income, and Hershey's. I bought ADP to complete a full share. Kroger went on a slight dip, so I added a small tranche, and the typical dollar cost average for Realty Income and Hershey's. Moving on, these are the companies that pay me a dividend in the month of November. Clorox, $6.01. Texas Instruments, $7.17. Procter & Gamble, $2.85. Colgate, $4.02. AbbVie, $8.90. Stag Industrial, $1.49. Realty Income, $4.76. Apple, $1.12. And Starbucks, $7.51. For a total amount of $43.83. When we compare the November dividends year over year, we can appreciate some fantastic growth over time. From $2.71 all the way up to $43 in 4 years for doing nothing. It is amazing when you think about it and put it into perspective. As mentioned in previous videos, the dividend percentage increase will normalize over time. I expect it to be around 8 to 15% long term, which is still good and better than the broader market. Moving to my portfolio, its current value is $16,288.67, including $157 in buying power. Currently having a dividend yield of 3.07%, which translates to $455 in projected annual dividend. This portfolio consists of 22 holdings. The performance this year has been pretty weak compared to the S&P 500. The year to date is only 1.27% up, while the S&P 500 is over 19%. And that's fine. The main purpose of the portfolio is to create enough passive income to cover my expenses in the future, and to achieve that, it's not needed to beat the market. Of course, capital appreciation could help speed up the process if I sell some holdings, but again, it's not needed to achieve my goals. In front of you, I have all my current holdings, a combination of fast-growing and blue-chip companies. Companies that are resilient in market downturns, companies that are predictable and easy to understand, companies that I fully trust and will allow me to achieve my investing goals. My current largest holding is Hershey's. Been buying this company since their latest earnings, where the capital expenditure was increased, but for me, they were using that money for expansion. We will have to wait until their next earnings. Second place, we have Starbucks with 8.1% of my portfolio. Bought heavily as well during the union dispute. After its recovery, it positioned itself as one of my top 3 holdings. And third spot, we have Realty Income. Interest rates can be a headache for REITs, but as for the latest inflation report, the Feds could possibly start reducing the interest rates in 2024. Besides that, Realty has been expanding their portfolio, buying Spirit Realty and a stake in Vegas Bellagio. Long term, I believe this will play out pretty well. So we have 22 holdings here. Take the time to see them carefully and let me know what do you think, if you have similar holdings or have any questions of any specific stock. We can see my holdings from a different perspective other than stock allocation, in this case shares owned, so you can appreciate the amount of shares of every single company. Moving to the sector allocation, we can clearly see that my largest sector is consumer defensive. This is due to the aggressive buys and capital appreciation of companies within that sector like Starbucks and Hershey's. Long term, I believe the technology sector will take over, because the company in that sector compounds extremely fast. But in my opinion, this sector diversification really does not matter. As long as you have high quality businesses, you should be doing okay as an investor. Taking a look at the annual dividends per holding, almost half of the holdings are bringing at least $20 in dividends. All of the companies in this list raise their dividends every year, plus I keep buying small tranches weekly. So this accelerates the compound effect. All dividends are manually invested except for Apple. Shout out to Realty Income for bringing more than $60 per year. Next up, we have the average cost versus capital gain or loss. The blue is the average cost and the gray is the gain or loss. Small amounts of positions are at a loss right now. The market has been a little bit shaky, but nothing to be alarmed. Hershey's is the most notable loser and it's hard to ignore. I've been consistently adding to this holding. Texas Instrument is also down due to some free cash flow concerns, and Realty Income is down due to the acquisition that requires cash. Other than that, massive winners like Apple, Starbucks, JP Morgan, and Digital Realty Trust stands out pretty nice. And last, total return. We can see how big or small the profit or loss is. Apple has been an absolute beast since I bought this company pre-split. It just keeps growing in value without the need of adding more capital to the holding. On the other hand, we have small holdings like Coca-Cola and Stag Industrial that have brought over 20% in gains as well. Most of the companies in this portfolio are in the green, and some that are in the red are about to turn over to profits. I do think this portfolio will do well in the future, and in this channel, I will continue to show my results in full transparency. As usual, I will continue investing $130 weekly and buying small tranches every trading day. Remember to subscribe to the channel to follow this journey, and if you have any questions, please let me know. That will be it for this video. I'll see you in the next one.